Welcome back to my personal finance update videos. Today's video is going to be a bit different and going to be on my retirement goals and how I plan to hit certain milestones such as over $2 million hopefully by the time it comes to my retirement days. Overall, today I'm going to be going through my current superannuation balance, which is my retirement balances that we have here in Australia, so it's a bit different to in America or the UK. Just going through what I'm currently investing in, my balance so far, and since I've been tracking it since March 2024, and my plans going forward. I'm also going to go through a compound interest calculator here and just kind of put in some of my details so you can see, and just to kind of get the end result of how my investments will be looking. I'll also quickly give an update on my personal stock portfolios. So as you can see, my stock portfolio is sitting around 68,700, and then my Vanguard portfolio is sitting around 55,000. So these are all separate from my retirement account, but I'm going to be going through that and highlighting that today as well. Overall, if we start from the start, you can see that I am a 23-year-old. So I've put that in. My current income is around 112,000, so I've put that in as well. Keep in mind going forward, hopefully my income will rise as I continue to build up work experience. I finish more studies, and yeah, that can obviously lift in the future. But just for now, I'm putting that as the base. The desired retirement age was just set here, so that's kind of the middle. They have the minimum is 60 and the max is 75, so 67's here. Keep in mind, by the time I get to retirement, it'll probably be longer, so it'll probably be 70 or so, just because of the way people are living longer, things like that. People are working longer. In terms of my current super balance, so my current super balance is around 32,229. So to kind of explain this to people who aren't in Australia or don't understand, this is my retirement funds pretty much. So the employer contribution you'll see here, 12% is the minimum. So on top of my salary that I get, I also get a contribution from my work, which goes into my retirement, and that's what's built up this. So keep in mind, I'm only 23 years old, so I am still quite early in my working career. And there are some buckets and things we can go through later around different super balances over time for different age groups. I currently don't make any additional contributions, but it probably is something that I will do in the future. Especially as my income gets higher and higher and I try to grow my super balance. But just for the time being, I've said no. Fund fees, I've just left this at default. So no contribution fees, an admin fee and an administration fee. And then in terms of my investment options, you can see I've put a 10% return. More on that later as I kind of show you how my portfolio is kind of built. But you can see over time the effects of compound interest and depositing money in. So by the time I'm 30, it says my balance should be around $154,000. So that's quite respectable. Still quite small, but not bad for the age group that I'll be in. Hopefully I can get it more than that, but yeah. Now if we go to 40, you can see that bounces all the way up to 424,000. So a bit more respectable as you can see the compounding has started. By 50, I'm at 900,000. 60 is $1.7 million. And then by 67, which is the retirement age we put in, is $2.74 million. So this really just shows you the power of compound interest and building that balance early. Because you can see the majority of this balance growth really does start later on when the balance is a bit bigger. Because compounding 10% on $1 million as an example is a lot bigger than compounding 10% on 200,000. So you can see it takes my total balance to around $2.7 million and $168,000 in fees paid. So again, just to show you my current situation. So when I started tracking this, in March 2024. So you can see my balance was around 12,000. So back then I would have been like 22 years old, I'm assuming. And since then it's grown quite a lot, or I would have been 21. And then if we have a look kind of year by year, if we go towards the end of the year, so December, it was sitting around $18,722 last December. And then this December, we're sitting at around $32,000. So decent growth, around $16,000. But again, as I continue to get more money, earn more money, this will continue to grow. My asset allocation is shown in this little graph here. I've taken a snip from my superannuation page. And what you can see is 60% is allocated towards the high growth pool. So for lots of people, again, this isn't financial advice, but Your superannuation fund, depending on your age, will probably group you into different pools. When you're quite young still, like I am, they'll put you into the high growth pool to hopefully get as much gains possible early. And then as you get older, they'll slowly de-risk you. So towards the end, you don't want to be losing any money. As you can see, 60% of my portfolio is in the high growth pool, which in the last 10 years has returned around 10%, 7 years, 10%, 5 years, similar. So you can see it's been quite consistent with that. I also made the personal decision to allocate 40% of my portfolio to international shares, which were unhedged. So I was willing to take a bit more risk, as I am still quite young, to try to chase a better return. And as you can see, in the last 10 years, that's done around 12%, 13.5%, 14%, 18%, 15.8%, and the last financial year to date, around nearly just under 9%. So stronger returns, which will definitely help the long term with growth. The reason why I've only put it at 40% is I still want to have majority of the portfolio probably in the high growth pool, because that does give me investments into things like real estate, fixed income, other things like that. Because as I highlighted earlier, you can see majority of my wealth is actually in my portfolios already. So it's already invested into the stock market. So I don't want to be over levered into the stock market, but I still do believe long term that's probably the best opportunity I'll have for growth, especially in something like my super balance. So that's how it's weighted at the moment. I will probably review this going forward, but so far it's been a pretty good decision for me, as the unhedged shares, international shares, have done quite well. So that's kind of my goal at the moment. That's kind of how things are put together. And yeah, I have this little graph here, so you can just kind of see the projection, how it's growing at the moment, especially since I got my pay rise. So things will just continue to grow. And as I've jumped jobs, I've switched careers and things like that, it will continue to go up. So, and in Australia, they've been lifting the minimum super contribution amount for your employer. So that will help me as well build this balance. My goal is not just to have super balance though. My goal is to also have my personal investments, so that I have a bit of both. I'm not relying on the superannuation balance again, because I don't want to be 70 and just be praying so I can access this money. I want to have other money as well, but I think this will be a nice benefit for myself as I get older, and maybe for my family in the future. So that's kind of how that's looking at the moment. Again, we can change some of these numbers. So instead of 10%, let's say it's 8%. That changes the balance a lot to 1.5. So that's where you can see those few extra percentage points really do make a difference. And that's one of the reasons why I did decide to invest some of the money into the shares side of things, outside of just the high growth pool. 6% as an example, only 800,000. So yeah, this makes a big difference. And then 12, you can see that will probably be $5 million. And again, most of that compounding is happening towards the last year, last decade, sorry. So that's really where the time becomes your biggest favor. So if you can put in extra money early, so like as an example, if we go back to 10%, and then instead of it being 32, we'll keep it at 32, but let's just say I make additional contributions. So before tax contributions, let's see, monthly percentage amount. So 10 or 8, and then let's have a look what this kind of does. As you can see, yeah, this really shoots things up, because the more money you can contribute early, the better you'll be. So that's just kind of my thing. I would advise everyone to look into their retirement. It might not be something you think about, especially when you're young. Again, I'm only 23 years old, so it's not really a conversation I'm having with my mates or anything around the table. But as you get older, it's something that will really make a difference. I know, speaking with my parents, they've made it quite clear that as you get older, you can see people who have saved for retirement and who haven't. It really does make a big difference. And then it makes a big difference on the next generation as well. If you have any kids, or you plan to have kids, or you don't want to be older without any money, having to rely on the kids and putting an extra burden on your family. So that's kind of how things are looking. Vanguard also offers a superannuation product. So I was potentially looking into a bit more about what they offer and what they do. I think you should look around, ensure you're not paying high fees, ensure you're getting good returns. But yeah, that's kind of how I've been thinking. Again, with my general stock portfolio, as this sitting at around $125,000, this will also help me towards my retirement as well, hopefully one day. But that's just kind of how things are looking across all my portfolios. In terms of my overall positions, I'll keep updating this. I'll do my weekly stock portfolio videos and my monthly net worth update videos. But yeah, this is kind of how things are going. Feel free to share how your investments are doing and if you're saving for retirement, and especially if you're from any different countries, how kind of your superannuation situation and retirement situation is set up.